guys, Danny here. This is Capital Cosm, and today we're going to talk about the precious metal space, and in particular gold and silver, as well as their miners. The overall market hasn't been looking too hot lately, but the precious metals sure have. Gold hitting its head on 1860 and silver hitting its head on $24 and even a few cents above that as well. So let's go ahead and dig in. But quick disclaimer though, I'm not a financial advisor. Nothing in this video is financial advice. Please do your own due diligence. It's your money, your responsibility. Okay, so to kick things off, let's look at this tweet from Tavi Costa. This is the Gold Miners ETF compared to the S&P. And it basically tells us that we formed this 2 or 3 year trend line, this resistance line here, looking at this ratio, and we've just been recently breaking out of it. So what does this mean? This means that gold has been outperforming the S&P, more specifically the gold miners. So this is really the tweet that really sparked my interest in wanting to kind of create this episode here. So let's go ahead and take a look at the gold metal itself. So gold has actually been in somewhat of a downtrend since about March of 2022, stretching all the way out till November. Now we've broken out of this downtrend and we've been moving up. Now the question is, what are the legs to this move, and what's the upside potential? So we've been seeing a rally for the better part of 2 or 3 months now. Let's kind of zoom out to see where we stand on a long-term time horizon to kind of get a better sense of where we might be heading. So let's zoom in a little bit more here. Yeah, so this is gold all the way back until the 90s. And you can see here we've built up this long-term resistance line going all the way back to 2002 and this long-term support line. Now, this is where we're at today. And if we just retrace back to that old resistance line, that's again has 20 years of foundation built on top of it. The strength of a resistance line is dependent on multiple things, one of which being the length of the resistance line, how many years or how much time has actually gone into building the resistance line, and how many times we've actually hit our heads on it. We've actually touched it. And as you can see here, we've touched it in 06, we've touched it in 08, we've touched it many times from 09 all the way out until 2011. We broke out of it momentarily being 2 or 3 years in gold time. Gold trades at much longer time horizon than most other assets, not just in days, weeks, months, not even in years, sometimes in decades or even more. So we broke out of it, retested the resistance line, and came back into this ascending, broadening wedge here. And this is where we're at now. So with this kind of in view, $3,000 gold doesn't look that out of the ordinary. Let me know what you guys think. Do you think we're gonna retest back up to this resistance line? Really curious to get your thoughts on that. But let's go ahead and segue over to the gold miners ETF. So this is the ETF across just a broad ETF looking at the gold miners. This is GDX, and this is GDX compared to the price of gold. How cheap is GDX compared to the price of gold? So for the better part of 15 years, we've seen gold severely outperform the GDX. An increasing, if this line goes up, that means that the GDX is outperforming gold. If it goes down, then it means that gold is outperforming the GDX. And we've seen this downtrend that lasted for quite a while in the GDX versus gold. And we've seen this built up support line here. We've touched it multiple times. It's been built up since about 2015, so it's got about 7 to 8 years of legs to it, and we've touched it. Again, we've touched it multiple times. It's a strong support line, and so GDX is at a pretty cheap place in time compared to the price of gold. So keep this in mind. GDX is cheap compared to the price of gold, and if we just simply retrace back up to the old gold bull market of the late 2000s, I mean, you're looking at something along the lines of a 4x move in terms of a retracement in the GDX price. Now, we can also look at the junior miners as well, the GDXJ. These are your small cap gold mining stocks. And this is how well they're doing against GDX. So GDX is cheap against gold, but what this tells us is that GDXJ is cheap against the GDX. So GDX is cheap against gold, and the GDXJ is cheap against the GDX. Try seeing that 20 times. Not even 20 times. Let's say 5 times. So this is where we're at. We've built up this long-term squeeze, and it looks like we're breaking out, guys. Are we breaking out of this pattern? Is the GDXJ, is it about to outperform the GDX? Are the junior miners about to be like rocket fuel compared to the GDX? Again, the GDX is outperforming. Well, looks like it's going to start outperforming the gold price. So let's look at the GDXJ compared to the gold price now. And this is where we sit. Again, we've got this similar support line here that we've built up over the years. And we've got this squeezing pattern. We're touching our resistance line here. And look at how cheap we are compared to the price of gold. You can buy more GDXJ today with an ounce of gold than pretty much any other point in history. Yeah, you've got these other points here, but for all intents and purposes, this is where we're at. It's still a pretty cheap point in time. So just to retrace back up, guys, this would take something along the lines of a 5x move in the GDXJ price relative to gold. So I don't want to just leave it at gold, though. So let's also look at silver. Let's bring silver into the mix. And let's look at the gold to silver ratio. So the gold to silver ratio isn't just interesting in terms of just figuring out whether gold or silver are cheap relative to one another, but it's also interesting in telling us the fact that we're in a commodity bull market. When we're in a commodity bull market, the price of silver tends to outperform gold. That's because silver is an industrial metal, whereas gold is purely precious metal. But silver has both precious and industrial metal components to it. So when we take off on a commodity super cycle, a commodity bull market, the price of silver sees added demand from its industrial side, because all those other industrial metals that go into building batteries and microchips and all that other stuff, which silver is a part of, suddenly get increased demand as well. So silver not only gets the precious metals tailwind aspect of it, but it also gets the industrial metals tailwind as well. And this is where we're at in the gold to silver ratio. The commodity bull market really started in March of 2020. And that's when you started seeing silver severely outperform gold. So when this chart goes down, that means that silver is outperforming gold. When it goes up, it means that gold is outperforming silver. It went down by quite a bit. We corrected in the gold to silver ratio from about April of 2021 all the way out until August of 2022. And now we're back into this silver outperformance zone. Let's also look at it from a longer term time horizon. And this is where we're at right here. So there's still a lot of headway for silver to go down. Yeah, so again, when the price of silver overperforms gold, you see this chart goes down. So we've got a lot of headway still to go for the price of silver, and which means for our commodities as well. So it's good news for our commodities if silver does well. Let's also look at the silver miners compared to silver, like we did with the gold miners compared to gold. We've created this, let's pull this back up a bit. We've created this 2 or 3 year resistance line, descending resistance line over the years, and it looks like we're just now breaking out of it with the price of the silver miners. The silver miners are still looking pretty cheap, just like we saw with the gold miners, their gold miner brethren. They're at levels not seen in a really long time. You'd have to go all the way back to 2020 or 2016 to see these kind of levels. But just to kind of retrace back to the old highs of the last precious metals bull market, I mean, guys, that's a 2.5x move right there. And also, don't forget what we just covered. Gold, silver is cheap against gold, and the silver miners are cheap against silver, which means the silver miners are cheap against gold as well. Let's also look at these junior silver miners. These are the small cap stocks compared to just the broad silver miner index, the SIL. SILJ is your junior miners index, and SIL is your kind of like your broad silver miners index. And it doesn't really look like SILJ isn't as cheap as territory as the GDXJ, for example, is to the GDX, the gold juniors versus the majors. So let's kind of zoom this out a bit. And as we can kind of see here, whenever this goes down, that means that the majors are outperforming the juniors. When this line goes up, that means that the juniors are outperforming the majors. And the junior miners, I wouldn't really call them as cheap, let's say, as say the gold miners are relative to the gold mining majors. But hey, let's take a look at it. This is the silver miners ETF, SIL, versus the gold mining ETF, GDX. And as we've covered before, both of these mining ETFs are cheap compared to the respective metals, both gold and silver. Now, which one is cheaper compared to the other? Well, this is a SIL to GDX ratio. So anytime this line goes down, that means that silver is outperforming, gold is outperforming silver. Anytime it goes up, it means that silver is outperforming the gold miners. And what we can see here is that we're at pretty cheap levels of the silver miners. The silver miners are cheaper than the gold miners are, just purely on a ratio basis. So if I had to kind of, if you were to ask me, and this is just my opinion, you don't have to obviously do your own research, but from a purely speculative point of view, I definitely choose the silver miners just for that extra torque and upside. But you really can't go wrong with the miners in general. The metals themselves look like they're on the verge of a breakout, or are in the midst of a breakout, actually, probably. So if if I wanted that extra leverage to the upside, I would definitely consider picking up the gold and silver miners. In fact, I've actually been adding in lately. I do have holdings in GDXJ and SILJ as well. So really excited to see where this precious metals rally takes us, and really interested to see what you guys think. What do you think? Do you think the miners are poised to outperform the metal? And are you in the metal? Are you in the majors? Are you in or the juniors? Let me know in the comments below. And for more content like this, be sure to subscribe to the channel and give it a like. All right, until next time, guys.